Waking up to a negative trading account feels like getting punched in the face, except you paid for the privilege. And I've been trading for over a decade, and I can tell you I've made over 6 figures and it still hurts. But here's the thing. In trading, and if you're trading, one day you will lose money. And the question is how do you react when it happens? See, a lot of traders spiral, panic, or make desperate trades to try win it all back. But that's exactly how you lose your account. I've been there too. I've woken up to losses so bad I wanted to quit trading altogether. I started thinking I need to win this back. So I opened up my laptop, started making trades, and guess what? I lost even more. I was trading out of fear and desperation, not strategy. And that's when it clicked for me. If I keep trading this way, I'm never going to be profitable. So here's the real truth. If you can't handle a loss, you won't survive long enough to see a win. So let's fix that. Okay, so what I'm going to do, I'm going to use smart charts as my preferred trading platform. You can use whatever you want. So let's name this workspace negative trades. Okay, one thing I like about this, you can set workspaces up. So now I got a plain chart. I'm just going to start with a daily time frame. And I will elaborate a little bit more on this. So now as a daily time frame, I've got a candlestick. Now, one little tip I like to use is a period separator. What the period separator does for me, it visually separates it in weekly intervals, even though I'm on a daily time frame. So as you can see here, I've got weekly intervals and we got our daily bars. So here's a little quick question for you. How many daily trading bars are you going to get in 1 week? Let's work it out. Monday, Tuesday, Wednesday, Thursday, Friday. 5 trading days in 1 week. So if we head over to the screen, what you can see here, right? Today's Monday. So this is Monday, Tuesday, Wednesday, Thursday, Friday. So let's look at last week. Monday, Tuesday, Wednesday, Thursday, Friday. You get 5 bars in a week. Anyway, that's not the topic today. The topic is understanding about what it's like waking up with a negative account. So in example, I want to show you, let's say you have entered here based on this continuation. All right. You just entered here and you placed your stop loss. Actually, we can use it this way. Actually, let's use this as a great example. You place your stop loss at this top swing here, or you put it at this part here of this previous swing. You take profits all the way down here. We put a sell entry here. We put a take profit here, right down to the low here. And let's just say our stop loss was just below this little break of swing on the lower time frame. So if you placed a trade on this week, and this week was coming in at, on the 22nd of November, you placed a short and you thought that the market could go round down 300 pips down, as we can see visually here. So you've entered the trade. Friday, Monday, you wake up negative. Tuesday, you wake up negative. Wednesday, you wake up negative. Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, Friday. 2 weeks. Monday, Tuesday, Wednesday, Thursday, Friday. 3 weeks. And then 4 weeks. On the 4th week, bam, we are now in profit. And it took 1, 2, 3, 4 weeks. So 4 weeks in the negative, 4 weeks in the loss. Now you're probably thinking, well, why do you want to do that? This depends on your trading style. I'm going to talk a little bit more about that. But this is what I'm trying to explain. If you are trading this style, you're going to wake up with losing trades. Not saying you're stopped out, but you'll wake up in a negative account. Now, that all depends on your methodology and your style of trading. Now, let's look at it from another perspective. I trade intraday. So what I can do here, let's drop down to a 1 hour time frame and let's change this period separator to the daily. So now if I dropped it to the daily, let's say I want to just take 20 pips out of the market. Or let's say I want to sell from here to here. Let's say that's the case. The end of day is here. It would probably be around about 10 p.m. GMT time. If you close your trade at the end of the day, then there is a actually, there's no chance you're going to wake up to a negative count because you've closed all your positions. You might make a loss on that day, but that's a whole different conversation. There will be many variables why that's happening. But if we're talking about waking up to a negative account and how to handle it, the first question is why are you trading this style? Is it because of your lifestyle? Is it because this is the only style you can do, or is this the only style you know? Are you trying to understand more styles? Are you trying to be an intraday trader, but you've heard someone's got to do it like this and you've got to do it like that? So understand a little bit more as we dive down. You don't have to trade like that if you don't want to. Think about it. If you don't like waking up to negative trades and it keeps happening, well, first of all, then maybe you need to seek out a trading coach and understand why you keep getting losses before it goes in your direction. Are you entering too early, right? You're getting the direction right. So if you were to sit there, look at your account, are you getting the direction right? And are you closing because you are panicking because you think you've got it wrong because the market hasn't gone your direction straight away? If you're getting the direction right most of the time, let's say 80 to 90% of the time, then it's not a bad methodology, then it's your psychology. Now, if you are closing your trades every day and you're making winners, but you're making more losers, then that's another conversation, because is it over trading? What's your style trading? Are you not factoring other indications like the higher time frame, or are you using too many indicators? That can be a problem. So trading isn't about instant gratification. It's about playing the odds over time. See, if you're in this for the long haul, you have to accept there will be days of hell and weeks where the market doesn't make sense. It's frustrating, sure, but frustration is part of growth. This is where mindset comes in. See, if you can't trust your own analysis, you're going to spiral. You'll start second guessing yourself, questioning whether you're cut out for this and convincing yourself you're a failure. And that spiral, it doesn't just hurt your trading, it crushes your confidence everywhere. So here's the trick. Understand what you're trading for. Are you trying to make big long-term moves? Cool. That means you have to be okay with waking up with a negative balance sometimes. Are you an intraday trader? Great. Close your trades by the end of the day and avoid overnight surprises. The point is, your strategy has to align to who you are and what you want. So let's get one thing straight. Just because someone else trades a certain way doesn't mean you have to. There is no one size fits all in trading. Some people are wired for big risk and big rewards. Others are more cautious, preferring to take smaller, consistent wins. Both approaches work as long as they fit your lifestyle. So look, another example, if holding trades overnight keeps you up at night, stop doing it. Close your trades at the end of the day, take your small wins or losses and move on. Simple, right? On the flip side, if you're okay with the occasional negative balance because you believe in your long-term analysis, then own that. But either way, stop letting too much information dictate your decisions. Have clarity and have a clear plan on your trading style. So look, here is another topic that always comes up, and I notice as a trading coach. Let's say you have a £10,000 account and you're trading it, and now you're at £8,000. You've had 2 months of negative trades and it's just not going well. So you're now at £8,000. The first thing someone always says to me, well, you know, I need to make that £2,000 back before I start making profit. I came across this quote once over the years, and I'm not sure if you have, but it goes something like this. Well, I'm going to try to reword it the best I can. But if your goal is to make 5% a month and your starting capital is 10,000, let's say 2 months later, you have 8,000. Your goal is still to make 5%. Your £8,000 is your new balance. You don't need to make no money back. You have £8,000 and your job is to make 5% that following month. That will shift the psychology to focus on making better decisions than trying to get that money back, because we all know what that feels like. Yes, you know, and I know that you know that feeling of trying to get that trade back. We go for that big haymaker punch and then bam, it just gets worse, doesn't it? And that sort of thing and those bad habits will destroy your trading. See, trading isn't about getting back to where you were. It's about moving forward from where you are. When you shift your perspective, you stop chasing losses and start focusing on correct, clear execution. And execution is where the magic happens. The best traders don't rely on hope. They rely on systems. Your execution should be systematic and mechanical, no room for emotion. Your analysis, on the other hand, should be flexible and adaptable. Why? Because markets are influenced by a million different factors, most of which you can't control. So build a routine, know your plan before you place a trade, and if something isn't working, adjust it. But don't trade emotionally. Emotional trading is how accounts get blown. And at the end of the day, trading isn't about avoiding losses. It's about learning how to handle them. Because the traders who stick around and eventually win are the ones who can bounce back after a loss. So next time you wake up to a negative account, don't panic. And if you want to know the exact trading strategies I recommend to new traders, then click the link below, as there is a 4-part mini series on a very, very powerful trading execution strategy called the breakfast breakout.